Welcome to today's market report.
A slew of upbeat updates from European blue-chip firms helped the region's benchmark index rise on Wednesday and further recover from Monday's sharp losses, while travel stocks roared back after weeks of declines. The Pan-European Stoxx 600 index rose 1.4%, extending Tuesday's small gains. Travel and leisure stocks jumped 4.2% after getting hammered recently by worries about a resurgence in various cases. Dutch semiconductor equipment maker rose 3.6% and nearly to an all-time high hit just last week after it raised its 2021 sales outlook and announced a new share buyback plan. Shares in the peers, ASMI and BE Semiconductor, rose about 3% each. Swiss drug maker Novartis added 1.8% as its second quarter core net income beat market expectations, boosted by its key drug brands. European companies listed on the Stoxx 600 are expected to post a 115.2% jump in second quarter profit versus a year ago, as per Refinitiv. While forecast for profit growth has consistently risen, many expect growth rate to peak in the second quarter. However, the upbeat reports helped investors to look past worries about a cooling global growth as many parts of Asia, Europe, and the United States grappled with surging cases of the Delta variant. The sharp rise in various cases remains a real and present danger, particularly for those countries where vaccination levels are well below 50%. In the case of the likes of the UK and US, where vaccination levels are much higher, markets are banking that the vaccine war holds back the virus enough not to overwhelm the respective healthcare systems of both countries. Investors expect the European Central Bank to stick to a dovish tone at its policy meeting on Thursday. Earlier this month, it had unveiled a new strategy where it will tolerate higher inflation by targeting 2% inflation. Among decliners, German business software group SAP slid 1.9% despite raising its outlook for the second time this year. Mercedes-Benz maker Daimler AG fell 0.9% after it warned that a global shortage of semiconductor chips will dent car sales in the second half of 2021. Oil futures rise on Wednesday, extending a bounce from a recent pullback as investor appetite for risk assets revived, despite industry data late on Tuesday showing an unexpected rise in US crude inventories ahead of a government storage report on Wednesday. Crude oil WTI was up 2.01% at $68.56 per barrel. Brent oil was up 1.92% at $70.68 per barrel. Gold futures was down 0.68% at $1,799.02 per ounce. On the FX front, GBP/USD picks up bids to 136.10 and consolidate losses around a 5-month low amid Wednesday's Asian session. In doing so, the cable pair confronts previous support stretched from June while keeping the downside break of 200-day moving average amid bearish MACD, given the little distance from the key support and a lack of trend reversal suggesting catalysts, the quote is likely to extend the south run towards the yearly low of 134.51. However, September 2020 high near 134.80 can offer an immediate halt during the fall, whereas fresh selling could take place below the latest low. Also tested the February surrounding 135.70. Meanwhile, a clear break of the previous support line near 136.40 won't record the GBP/USD bias as a 200-day moving average level of 137.05 could test the bourse. Eurodollar phase bounce off intraday low, down 0.06% on a day around 170.70, heading into Wednesday's European session. The major currency pair refreshed a 3-month low the previous day before bouncing off 117.55, while the recovery moves tracked Wall Street gains mainly due to earnings optimism and hopes for further stimulus. The pair bears keep reins as the coronavirus will intensify. Also challenging the pair will be the cautious sentiment ahead of today's procedural voting on US President Joe Biden's infrastructure spending bill and Thursday's ECB meeting. The dollar index inched up 0.07% to 93.047. The index, which is up 2.8% since mid-June, also seemed close to testing its March peak of 93.439.
This is today's market news. Thanks for listening. We'll see you next time.